As a turbulent 2025 bids goodbye, I frankly call it turbulent. Several brokerages are banking on the new year to shed the correction mode and eye new targets with the top sectoral and stock picks of these brokerages. What are those? Somit is here to share the same. Somit.
We have compiled these notes from 6 foreign broking firms. So what are the Sensex or the Nifty target that they have given for 2026? And firstly, on Sensex, HSBC and Morgan Stanley both have given a target of 94,000 and 95,000. So from the current levels, they're expecting an upside of anywhere between 10 to 12% odd. And when it comes to Nifty, the target variation is quite large. For Jefferies has given a target of 28,300, followed by BofA of 29,000. Nomura has a target of 29,300 and JP Morgan has the highest target of 30,000. So returns could vary anywhere between 12 to 16% for the Nifty 50 index over the next one calendar year. Now, what is HSBC saying? They're expecting the Indian equities to be quite strong, and they're saying that they're strongly positioned for 2026. And when it comes to earnings, the worst of the earnings downgrade is behind as per HSBC. For Jefferies, they are saying that the Indian equities performance has been relatively weaker when compared to emerging markets, and that is expected to improve. And they also believe that the worst for the rupee depreciation is behind us. For Bank of America, they are saying that there is no scope for valuation expansion from the current levels, but there is scope for upside, which will be earnings-led and not valuation re-rating, but earnings re-rating is something that they're expecting. And they're saying that growth could accelerate from here on for the benchmark stocks. When it comes to Nomura, they're also expecting a recovery in the corporate earnings, while JP Morgan has given out a number that they're expecting the 2026 earnings to grow nearly 13% and 2027 earnings to grow 14%. And they continue to say that Indian valuation continue to remain at a premium compared to emerging market, but the gap has come down in this calendar year. And when it comes to Morgan Stanley, they're expecting a strong bounce back in Indian stocks in the next 12 months. And they also say that the long-term story continues to remain intact, and this is gaining strength with government's new policy action that has come into place. And when it comes to stock or sector-specific idea, a host of stocks and sectors that multiple brokerages have given. Firstly, starting off with HSBC, they are saying that Kalyan Jewellers, M&M, SBI and ICICI Lombard fit the best and have the good tailwinds going forward. Risk-reward ideas, Infosys, Phoenix Mill and Marico. And when it comes to top choices from the less favored sector, it's Hindalco, Apollo Hospital and Adani Ports. This is from HSBC. From other brokerages like Jefferies, if you look at, they are overweight on lenders, auto, cement, hospitality, telecom and real estate counters, while they're underweight on staples, IT, industrial and pharma. Now, they have also given top 10 stocks in India, and that's Axis Bank, Bharti Airtel, Chola Finance, TVS Motor, M&M, GMR Airports, JSW Energy, Max Health, Lodha or Godrej Properties and Ambuja Cement. When it comes to Bank of America, they are saying that they prefer defensive stocks, and a couple of defensive stocks in their list is telecom and hospital, and they're underweight on industrials and cement stocks.
Well, a comprehensive list, if you will, for outlook of 2026.